Hey everyone, welcome to Breakout Wednesday for the 24th of Jan 2024. It's currently 4:30pm on the West Coast, 7:30pm on the East Coast. First of all, remember, this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. All right, here's a chart of the All Ords. Obviously had a bit of a rally, had a retracement of rally off the 50-day moving average. Now, there's some stuff I want to get through. Last week was a kind of a talk that I think was probably the most meaningful, important Breakout Wednesday ever. I hope some people got some stuff out of that. Some stocks that I've been talking about a lot over the last few weeks, NVIDIA, NVDA. I've trimmed about 3/4 of this and I'm letting the last quarter run. Amazing move out of this base. This is just textbook, as I've been talking about, just 100% of what I'm looking for, and that's been awesome. Okay, BMN, I'm still in. I've trimmed a bit here, as I've talked about, and I'm still in the rest, and so I'm kind of just letting that chop around and do its thing. Try not to get caught up in the intraday moves. Microsoft, taking half off at this first target and just letting the rest run. NXG, I'm still just hanging in there. Just haven't taken any off, just been patient. CIA I got stopped out of for a small loss. Okay, that's life, but yeah, that's a loss there. And 1 second, ANZ I've been talking about, had a nice breakout of this huge base. I think a lot of people just wouldn't trade that because it's ANZ and blah blah blah, but at the end of the day, I just try and leave such emotions at the door and just look at the base, okay? Because it's really more important than anything. And huge bases lead to very reliable big moves. And that is one hell of a base on ANZ, okay? So ANZ, good start to it. And I just wanted to quickly, talk through, those people have been listening to this for years, okay? The good old ETFs, okay, that, hack, just trending up in just compounding the profits incredibly well. Back near all-time highs up here, from the COVID highs. Just took those out actually, okay? I was talking about CLDD when it was kind of down here in the doldrums, and I was, talking about how I was dollar cost averaging into it. I forget where it was, a bunch of times, and now it's just taking out new highs and going for it. The NDQ one, likewise, these are all correlated, but I've been, during that bear market when everyone else was turning against it, there's just such huge moves these things have had, and I just have the opinion they probably have a lot further to go. And even the basic old, S&P 500 ETF, it's just a very nice way, in the self-managed super fund to have no-brainer, okay, kind of, investments and positions. It's like the old saying, in the short term, this stuff is risky, but in the long term, the real risk is not being invested in this stuff. And I'm a huge believer of that in the long-term accounts, okay? I just think, I don't have time to actively trade my self-managed super fund like I do my trading account. I would have to put them all in a one account to do that, and just do that. And so there's only one trade. It's all happening in the one entity. I don't, I have 3 different kind of accounts, and I'm too busy in my trading account, and the long-term investing account is just really kicking ass right now, okay? Mainly because I keep buying these ETFs. And I've got a very long-term horizon. The gear one, it's choppy. It's not doing as well as the American markets, but nothing's doing, nothing in Australia really is doing as well as the American markets, which is why I'm kind of heavy in American markets in that long-term investment stuff, okay? You don't have to trade the NASDAQ or NYSE to do that. You can, the ASX offers these awesome ETFs, right? Which is pretty much just American companies. That's enough on the ETF shit. There's some stocks I want to talk about, but I'm going to keep this pretty quick this week, and I'm probably not going to be able to load this till pretty late tonight. But the insurers, okay, there are big bases happening in a lot of insurance stocks. This is Suncorp. This is a weekly chart with a massive base here, okay. There's what's the other one? IAG. Okay, this is a weekly chart of IAG, just forming massive resistance here and just basing away, and it's kind of a stage one base after a massive bottoming base. What else is there? There's Medibank that has kind of already, maybe it's a leader, it's kind of first to move out of this base, it's had to move back into it. We'll see that's a fail. I just think that there's a lot of insurance companies basing, I hate insurance companies, but go back and look at the insurance companies in 2004, when they were having big moves with increasing interest rates back then. Okay, for those who were around investing or trading back then, it was an environment where commodities was booming and interest rates were going up, and it kind of had pretty similar to now in many ways. All right, and we had a massive run in really, really amazing bull market, and this is Sun back then. And just go back and look at some of the insurance stock bases and compare them to these days. It's pretty interesting to look at, and I think in that long-term investing account, I've certainly added some insurance exposure. Okay, first time in many years I've done that. Now, the scan that I've been doing diligently at the moment is my percent scan. So within 2% of the last 200 days, I've been up in it to 200 days lately, and just, I've been doing my Dava scans every night, but really this one I've been never missing it, because it's finding me really tight bases and stocks that haven't yet broken out that are about to. I really put basic filters on it, just ignore results have a value less than like 100K. So I'm pretty much getting anything I want in there that's up near a 200-day high, but hanging out near that 200-day high within 2% of it. It's just finding me, it's pretty rare. It's pretty rare if I didn't even do that. It's pretty rare for me to miss a trade. Like all my trades pretty much show up in that scan. Okay, and just a few at the moment on the various markets. Okay, this is APP on the Nasdaq, which is the tech stock. This is a weekly chart. This is a daily chart, and that's a one hell of a base. All right. It's rallied from 37 really straight up to 45, like a bit like Nvidia. Not Nvidia didn't do that. Sorry, a bit like AVGO did. And I would love it to pause here instead of just breaking out tonight and going with it. But shit, like I'm still going to take it. It's just such a big base. It's in the best sector. Anyway, so that came up in that scan. It's also coming up in weekly Dava scans out of the yin yang and all that stuff, right? There's another one, BLTE, that came up in my percent scan, and this is a pharmaceutical stock, and this is its float. This is its previous high. It's taken out that high, then it's based in. What brought it to my attention was it was coming up in my percent scan, and it was just this tightening action here. Look how tight it is. And last night I had this wick down, and then it still hasn't taken out that high. And this is just one of these setups with blue sky above it and an exciting stock that can either just wouldn't surprise me if it broke out and ran up 50%, like in a matter of a week or so. It also wouldn't surprise me if it wicks out and then closes down 10%. Okay, that's trading. I'm not scared of, I don't have an issue with being in these exciting, fast-moving stocks. Mara was one too, and it just went up a lot, very, very quickly. And so that's an interesting setup, and I'm definitely going to trade that. Happy with the risks on it. And in the percent scan, what's come up on the ASX is IRE, which is kind of tight in here. Now, I used Iris for years and years and years when I was, in a different kind of phase in my trading life. And, obviously I know all about Iris, right? But, good and bad, there's a lot of people that give it an incredible amount of shit on social media, and it's probably very, very fair to give that shit. And it's had its woes with this gap down and blah, 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 right? But From a technical point of view, we've had a gap up. It's sitting on all these moving averages. It had a fake out here by like a couple cents or whatever, 10 cents or something, and now it's forming just an even tighter right-hand handle. So I had a fake out here, it had another fake out here, and now it's forming a really tight, hopefully right-hand handle. So I don't have a problem with trading those if the technical setup's perfect. The fact that it maybe isn't the best product, or people bag it out, I don't care. People bag it out, all sorts of stocks that go to the moon, right? If the technical setup, I will always take a perfect technical setup, pretty much. The best ones are the ones with fundamentals behind them, like Nvidia. But if the technical setup on the chart's good enough, I'll probably just I often will take it and ignore fundamentals altogether, right? Ideally, you want explosive earnings in the best sector and stuff, but then again, if the chart pattern's good enough, I will probably take it too. Okay. Other stuff setting up is GTK's come up in that scan a bunch of times. It's also in Endava scans. I think I've talked about this one before. This is a late stage base in the sense that it's a pretty mature uptrend, and but this just keeps tightening and tightening and tightening. If it can just if that keeps doing that, it might have a really nice move out of that base. And coming up in volume scans and breakout scans is some of the old kind of darlings of the market. And I rarely pick bottoms, guys. Like I did, I do every now and then. I did with Origin, for those who are listening, a year or two ago when ORG broke out. I did with Asia when it was breaking out and had a rally, and then it stalled. I have a fair bit over the years, I guess, but I've been watching this one. It's just because of its action, okay? This channel it formed, the breakout of that channel by a few pips, the retracement here, and now a pop on big volume. And this thing's been hammered like a Luca, okay? From highs here of 12, down to lows of 6, and now this channel here where it's breaking out just above the $7 level, okay? And so, I think it's interesting. I think potentially, the risk reward down here is exceptionally good, okay? This is coming up on volume spike scans, okay? When you go into kind of pattern and events and just search for, this scan I do, volume more than 300% higher than the previous day. It's coming up on that scan. It's coming up on 30-day breakout scans, and it's coming up on, pretty much any, so many scans, right? So, that one popped up. And I thought, shit, that there's a chance that this has bottomed, and I like the looks of it. So that is that. I pretty rarely go against the main trend, but when there's signs of a bottom, it can really pay off sometimes. Risk reward speaking. Okay. All right. That's it this week. Short, sharp. I got to piss off, and I'm going to load this up late tonight. Cheers, everyone. Catch up.